Hi everyone, I'm joined today by the wonderful Emily Matthews from Sharon Partners. Emily's a financial planner and she's just going to help us sort of discuss an issue or a topic of income protection, which I sort of find there's some confusion with some clients, because when I go through clients' returns I often find not many are claiming it, or when I ask, many say, oh, I've got an inside super, and they don't really know what they're covered or anything like that. So I thought I'd just sort of go through, have a chat with Emily about the tips and traps and, what income protection insurance is all about. So welcome. Thanks, Emily.
Thank you.
So I guess the first thing is, what is income protection insurance?
Yeah, so good question. So income protection insurance effectively provides a monthly benefit if you are unable to work due to illness or injury. Okay, the monthly benefit can go all the way up to age 65, and what that means is if somebody again was injured or ill and they couldn't return to work because of that, they've effectively got cover for their entire working life. Okay, so until they can return to work or until they turn age 65 if their benefit period is till then. So that's effectively what
it is. Yeah. And because often, clients say, oh, no, I don't need it, or, things to that effect. Like, when should sort of people start considering if they've never had income protection insurance?
Yeah, definitely. So it's quite interesting. Many people won't hesitate to insure their home or their car, but they actually fail to insure their most important asset, which is themselves.
That's right.
So their ability to earn an income and provide for the household. So really, it's important to consider, if something were to happen, if you were to become ill or injured, and you couldn't work, how is your household going to continue to be funded and maintain that standard of living? Okay, and that's where income protection cover is really important.
And I guess it's like all insurance, it's giving you that peace of mind.
Absolutely.
You hope you never have to use it, but it's that peace of mind knowing that it's not going to all collapse and you're not going to sort of lose your financial assets if something unforeseen happens and you get ill and can't do it. Another thing, as I sort of touched on in the intro, is should they have an inside super, outside super, and a lot of clients, I don't think that they're actually aware of what cover they've actually got inside a super and what it means. So can you explain sort of the difference?
So you can hold income protection inside super. The benefit of holding an outside super, as you would know, Paula, is it's a tax deductible expense. Okay, so that's where we typically would suggest that it's held outside of super for that tax deductibility reasons. Okay, so for example, if you've got somebody that's on the top marginal tax rate, 49%, including Medicare levy, it's effectively halving their premium. Okay, come tax time. The benefit, or some of the options of having income protection insurance through super, is to alleviate potential cash flow pressures. Okay, so that's an option, but something to always consider, and something that a lot of people aren't very aware of. Many people say, oh look, I've got cover within my super, it's in my industry fund, etc. When you actually look into those policies, the definitions and the terms and conditions are generally quite broad. It's not actual comprehensive cover. So that's why it's so important to review your cover to make sure that you are adequately protected for your needs. Okay.
Yeah, because you could, potentially get in a situation where you think you're covered because you think, oh, I've got income protection, and you go to make a claim. And my understanding is they don't do the, it's not underwritten, which means they don't ask you all the questions, look at your pre-existing conditions. They do it at the time of the claim, so they could deny you.
Correct, So a lot of the default cover that many people would have within their super, quite right, there's no underwriting process initially, which means, as you've just alluded to, when you go to claim, the insurers will look back at your medical records, and if they think that, oh well, this was potentially a pre-existing condition or whatever it might be, you might be denied that claim. So that's why it's so important to make sure that you review your cover and make sure that you do have adequate cover in place.
That's right, because there's no point paying all those years. And and it's reducing your super balance as well. And I'll sort of touch on just with the tax deductibility. The tax rate in super funds is only it's 15% if you're high income, and it would sort of go up to the 30%. But you're actually not getting as a good tax deduction as what you could outside of super. So that's great. I think that's really valuable information, and I think the key takeaway is just review your policy so
Yeah.
that you can then make an informed decision as to,
Yeah,
you
absolutely.
know, like what your options are, whether you want to inside, outside of super, and what you're actually covered for, and that you're not going to be sort of denied any cover.
Yeah,
So,
yeah, and that's where, you know, engaging with a financial advisor really helps too, because they understand the terms and conditions and you know how the structure of the policies are best suited as well.
Yeah, because it's so complicated. That's you hand it to the expert, I say. So Emily's kind enough to, and Sharon Partners, to offer, you know, free reviews of your insurance. So if you'd like a free review, just sort of, you know, you can send me a private direct message, or just comment below, and we can get in touch and I'll connect you with Emily to have the review. So thank you, Emily. That's been fantastic, and you know, look forward to sort of chatting again and sort of learning more about in the financial planning world.
Yeah, fantastic. Thanks, Paula. Appreciate it.
Thank you. Thank you.
Thank you.
Thank you.